Let's get some analysis to start this morning here. And joining me now, Cornelia Meyer. Cornelia, if you can just stand here with me at the moment. Cornelia taking time here to join us. Cornelia, President of MRL Corporation in London. Tell us a little bit about when we look back on the last 6 months. It's been a time of uncertainty. It's been a volatile time. But as we're hearing too, is like that it's almost slowly but surely we've seen that price slowly getting better month by month.
Well, the narrative has definitely changed. The narrative up to now was really that that we had demand that was not increasing enough and just so much oversupply, and stockpiles were building and building and building. But slowly but surely, because the price was so low, higher cost producers were falling off. IOCs, international oil companies, investing markedly less, about $500 billion over the last 12 months. And slowly but surely the narrative has changed to one as, oh my God, what will happen when these lack of investment is finally going through the pipeline and the oil price is coming up. So yes, the narrative has changed, and as the UAE minister so aptly put it, we are now trusting the market again to do what the market does best, even out supply and demand at the right price.
Now, of course, the market sentiment is also changing, and I know while fundamentals are absolutely essential, we really also have to look to sentiment, and it really, in the last month, in the last few weeks, really, we're seeing a tremendous shift in sentiment, and a lot of the investment banks, too, coming out a lot more positive than they might have been a few months ago.
Yeah, and they come out positive because they had to come out negative. That's especially the shale oil space. We have seen about $36 billion of loans defaulted on. We have in the global oil market seen about $1 trillion wiped off the balance sheets of in equity of oil companies. So the banks were hurting, and a lot more companies, especially in the shale space in the US, have gone bankrupt, and that obviously gives less production. And as we see this quick fall off of shale production in the US, finally, it took much longer than we thought how long it would take in 2014 when OPEC decided to leave production levels unchanged. Now that we see that eating into the system, you can feel it, and that's why the banks come out and finally realize. I have been saying this for 12 months. Finally, the banks realize, the bank analysts realize and say, oh, yes, there will be less production. And then we've also seen consumption of last year doing quite good. China has grown less, but she has still grown in terms of consumption. India has grown a lot. To 16% in terms of gasoline, 16% in terms of gasoline. So we see demand going up while supply is coming down.
Okay, let's stay with the Americas for the moment here, and we're looking at that issue too, where there's a lot of oil coming back off. Only last year we saw 1.4 million projected growth in demand, and now actually when we're looking at the monthly oil market report from OPEC, those figures for the non-OPEC, now a decrease probably less than 700,000 barrels. So a lot of oil in that sense coming off the market here. So demand in that region tends to be falling off as well. I mean, what the policy here that OPEC has put in place and taking some of the high-price shale producers off the market, this certainly appears to be working. But the danger is how quickly and at what price could the shale players come back in?
Well, they will come back in quite quickly. They can come back in quite quickly. They need probably about $50 to $70. But mind you, the space has changed. These used to be very small, nimble companies who just could go in and out. Now they have a lot of the big companies like the Exxons of this world, the Chevrons of this world who have invested in. And everybody who's ever worked for a big company knows that they move very slowly. You have to go through investment committees and. So that space has changed for good. It will not be as agile and as quick as it has been.
Now, of course, we've got the summer driving season, which should actually help as well in the US, but again, around the world, in the Middle East, of course, we've got hot weather coming, so an awful lot of production, coming on board to big demand on energy, really, for the summer months right across the world, isn't there?
It is huge demand, and the driving season, especially with gasoline being cheap, the driving season will be a very big driving season. And another thing we have seen in the US is that consumers have started to buy the gas guzzlers again. When you go to the US streets. They went on the small hybrids, and everything was small and compact, and you thought you were in Europe. But you see those big SUVs, these big gas guzzlers back on the streets. So we have gone back to the old ways.
And again, it comes down to, I guess, value for money. When there's a lot more, when oil is cheap, I mean, it really is a gift. It's almost like a tax break for the consumers in many ways right across the world, isn't it?
Well, it was in many ways trillions of dollars. And think of another industry. Think of the airline industry. It was about 60-70% of operating cost was fuel cost. And now it has come down to maybe 30 or 40%. So they have, it has created headroom for them in terms of profitability. So a lot of industries have benefited a lot from the low oil price.
Now, when we look around the world and we look at, the production of the OPEC countries here and investment in many of the OPEC countries, Iraq is one country too that really has been struggling a bit, but they're coming back on and they're actually getting more oil into the market, aren't they? And I believe actually our colleagues from Iraq are joining us just now.
Yes, they are. Iraq has actually done extremely well. They have had a third of more production over the last 2 years. They had 4.4 million barrels a day. So yes, they have done extraordinarily well. And if this political situation calms down a wee bit, they will go back gangbusters. So it's definitely a country to watch.
And indeed also somewhere that, they need the production, and they need an awful lot of help, of course, to rebuild the country. This is absolutely essential. So they're a valuable asset. Obviously the number one focus for the government at the moment.
Yeah, it's the number one focus for them at the moment, but they do still need a good petroleum law, and they need to iron out how they're dealing with the various provinces and who does what, and so there are still bridges to be crossed and plans to be made, but they're doing remarkably well.
Now, when we look at what's going on in many of the other countries too, we're looking at Nigeria. Unfortunately, there's been a few issues there at the moment, and I see some of our Nigerian colleagues who are joining us right now. But a lot of work needs to be put in there too. The new minister who's been in place now about a year, who also is, of course, the OPEC president-elect at the moment, or the former OPEC president. A lot of work to be put in Nigeria, but again, they're looking at it very carefully, and as the minister said too, it's top priority for them.
Well, it's top priority for them, and I think this administration really addresses all the key issues. They address the issues of governance, and they address the issues of getting gas to power stations, and all of those things that need to be addressed. This government, more than any government before, is really trying to work this out. So they're doing well. But yes, they do have problems, and they have another thing. It's terribly underinvested, the sector, and the problem is, if I invest $1 today in conventional oil, I will produce a barrel between 3 and 10 years from now. So they're starting to suffer under the underinvestment they had done.
Now, talking about underinvestment in the market, we've seen trillions of dollars actually come off the market in the last 2 years, and this is going to have, probably a knock-on effect in a year or two from now. What is the danger? What do you see in terms of the investment that's just literally gone from the market now?
Well, I see two things. That the investment that's gone from the market is really very, very serious, because again, we will feel the lack of investment in another 3 to 10 years. And we can see that big companies are worried too, because why would Chevron invest in the shale space, which has a shorter lead time, if they weren't worried? Because it's not what they usually do, because they're worried that they haven't invested enough. So yes, the underinvestment is a huge problem, and I can foresee by 2018, 2019, somewhere between 2017 and 2019, I can see a real oil price spike, because it's oil, it's a long cycle business, it's not a light switch, you can't just switch it on.
And indeed, that's probably the difficult thing about the market, where people look at it and probably they maybe underestimate the lack of investment at the moment. I believe our Saudi colleagues are joining us now, and of course, great excitement with the new minister. We're all going to miss Mr. Al-Naimi. We're missing him, of course, but many, many years of tremendous work here. But I think that was just a few of the Saudi delegation. One of our other colleagues who's just joining us now, I believe too, the Indonesian delegate is just about to show up here. And Indonesia have been welcomed back in. How important has that been?
Well, it's very important. It's also very big, significant. Indonesia became an oil importing country, left OPEC, and is now back in the fold. And I think it's tremendous to have them back in the fold. And you know, they're very, very big on gas. They're getting bigger again on oil. But it's an important country. It's an important Asian nation as well. I think it's great to have someone from rising Asia in the fold of OPEC.
And again, another country that's going to need a lot of the investment too. As you say, on the gas side, they're really looking at it. I know they've got a big conference actually going on later in the year too. But all eyes, I mean, particularly when we're looking around the world here, in the demand that's coming out of that part of the world as well. I mean, huge demand on the Asia-Pacific side.
Well, huge demand, and we saw Chinese demand go slower. We saw Indian demand really growing. We see Indonesia, and we see what I always call the next 11. You see, it's not just them, it's also Turkey, it's also the countries in the Arabian Peninsula, some African countries. They're all really consuming a lot of oil.
Now the Algerian minister has just walked by too, and of course a lot of focus in Algeria, a lot of gas there, a lot of oil, but another country that's really looking at its energy assets as well.
And it needs to. Sonatrach and Sonogas are great companies, but they're underinvested, so they really need investment. You know, I would say everybody on the African continent, all of the countries, Angola, Nigeria, Libya, and Algeria, they all need a lot of investment.
And I think, you know, when we talk about that, that's ultimately what's needed now. But at a time of tremendous uncertainty, where's that investment going to come from, Cornelia? The banks are not eagerly giving money out there, and it's probably going to be a while before we can convince them with the volatility in the market that actually, you know, the energy sector is probably a good place to invest. So where's this money going to come from?
Well, I think what we need to do is, and I've gone out, so we need to have a call to action. We need $70 trillion over the next 25 years, $3 trillion a year, and we really need to start a dialogue globally between banks, between oil companies, between countries, to see, but between also alternative sources of funding like private equity, Islamic finance. We need to all get together and have a strong dialogue on how do we raise the money, what is needed to give investors the assurance that the money will be safe.
What do you think it will take to actually convince the banks to and the big players as well? You know, that it's still a strong industry. When we look at the energy demand, we look to the medium term, we look to the long term, all sorts of energy. I mean, it's absolutely essential just for our day-to-day life. I mean, it's essential.
But the banks are still lending to the big oil companies. The banks are still lending to a lot of the national oil companies. Where the banks have really fallen off in terms of lending is the US shale space. But that will change again because, as I said, the Chevrons and the Exxons have moved on. So the banks will go and lend in that again. So the banks will always, when there's a buck to be made, the banks will invest, and there's many, many dollars to be made in the oil space, especially when we see the oil price coming up. And as forecasts go for oil prices coming up, the banks will start to invest again.
And of course, we look around the world to the different levels of investment that's needed. The downstream has also been performing particularly well in the last 2 years as well. And indeed, many times for the last results from many of the big companies, it's been really the savior as well.
Yeah, absolutely. But you always see that when the oil prices are coming down, that's the time when the downstream really does well, which is why integrated oil companies to this day get a premium over pure upstream plays, because they're able to even out the trough.
And again, we have seen that, you know, from the IOCs too, doing particularly well, BP, ExxonMobil on the downstream. But again, new focus in the oil-producing countries on the downstream. We've seen that in Saudi Arabia, we're seeing it in the UAE, we're seeing it in Kuwait and that. And also probably Nigeria needs to be looking at that. But the downstream for the oil-producing countries is probably something that they could put a lot more investment in as well.
I would say the Gulf countries have, and the Gulf countries have also, if you look at UAE, if you look at Saudi, you know, if you look at Saudi basic industry, they have huge investment also in chemicals. So they have really been integrating, and they said, why should we just export the oil and leave all the upside out? So the GCC countries are fine. But yes, Nigeria is exporting oil and then importing refined product, and you lose money on that. Iran has actually done well in upping its production capacity on the downstream. Lots more refining capacity. 2 years ago, they also had a problem with exporting crude and importing product.
And again, that integration, as you say, I mean, it just really makes sense for everybody. I do believe that our Venezuelan colleagues are joining us now, and again, big economic issues that they really have to handle there, and that's absolutely important that they get that right. So the government is a bit preoccupied at the minute too, but of course very interested in terms of what's happening here with the oil side as well.
Well, I think Venezuela is very important. They really need to straighten out the sector. They really need to be able to attract that investment. And what they need to do is give investors the certainty that the investment is safe. Let's not forget Exxon left, a lot of companies left. So they need to go on a huge charm offensive to get the IOCs in, not just with the money, also with the technology, because those are the technology leaders. You need the oil field service companies and the IOCs. You know, the big NOCs, the Aramcos, they're technology leaders in their own right, but other NOCs are not technology leaders in their own right, so they need to go on a massive charm offensive.
And again, when we look at the South America, so to speak, I mean, there's been issues in Brazil also with the energy side, but it's a huge consumer region now. There's been tremendous growth there we're seeing in terms of GDP, a lot more momentum coming back into the region, so not just for any of the exports, or even in Mexico as well, where the industry is opening up a lot. So the whole South America really needs to actually, sort of notch up a little bit in terms of their investment and production, the whole lot.
Yeah, absolutely. But you see, the Mexicans have done a great job in restructuring their energy sector. So they have done a great job. And the Brazilians are now also working with the new government, working through the issues with PDVSA, with their national oil with Petrobras, with their national oil company. So that's good.
Let's quickly move countries and let's head back to Saudi Arabia. I believe the new minister is joining us now. Mr. Al-Fallah is walking through with the conference and everybody. Again, tremendous excitement with him in this new role.
Yeah, absolutely. And he's an old hand. He knows the OPEC well. He has been for 30 years in Aramco. He's a seasoned hand. Saudi Arabian oil space is in very, very, very safe hands.
And of course, when we look at production too, I mean, there's a lot of change in the country. There's a lot going on, and it's again a big sea change, I guess, a crew shift in Saudi in general.
Yes, there is. And I think in production they're producing 10.4 million barrels a day. They can probably go up to 11 million barrels a day. The sky's the limit, essentially.
Now, the UAE minister is joining us now, and again, a lot of work going on there.
Yeah, a lot of work going on there. And what we see with the UAE is they have been really doing a stellar job in investing. Like the Saudis and the UAE, they have done stellar jobs in investing, and prices could go down. They have still invested, and we will have to thank them in 3 years' time when prices spike.
I know we're bringing you around the world at a rapid rate, Cornelia. Thank you so much for being on top of all of these countries for us. Let's talk the economy in general, because when we look at the growth, I mean, it's very, very slow growth at the moment, and depending on where you look, it's up, it's down. We heard OECD, they were meeting, I believe, in Paris this week too, looking at about a 3% growth, which, as they say, no different than last year, but even that, I mean, they're happy enough because it's not going down. How important is it that we see a little bit more momentum come back into the global economic growth?
Well, I think for demand, growth is key. For demand, growth is key, and we need to see more. We need to see more demand coming in. But we're not doing too badly. OECD is not doing too badly. America is doing quite well. Don't forget, America has created 200,000 jobs every month last year. That's a lot of jobs. That's a lot of people buying cars, driving in those cars. And we see rising Asia. China has not dropped off as far as we thought. India does tremendously. So yes, we're not doing as badly, but obviously the better we do is fine. In an odd way, higher oil prices are good for OECD economies because they're worried about deflation. And the ever falling oil prices have put deflationary pressures on the economy. So rising oil prices will give inflationary pressures, so the central bankers will be happy people.
And talking about the central bankers, I mean, and chances of a rate rise coming out of the US. ECB is meeting here in Vienna today as well. So it's a very busy city here. And you know what's happening in Japan as well. So what much of an impact will the monetary policy be having?
The monetary policy will have a huge impact, and we can probably expect a rate rise not in June because we have the EU referendum in the UK and other big things happening. But we probably can see a rate rise in July. And we need to see rate rises because central banks don't have levers anymore. If the interest rates are so low, what do you do when the next crisis comes? So we need to see those rate rises. Will they be a little bit painful? Will they have a little bit of a damper on the economy? Yes, which is why the Fed is going so slowly, and they say we'd rather only have 2 or 3 and not to backtrack. We want to do this wisely and prudently. So we're lucky we have prudent central bankers.
So again, so you're not as worried as some people out there thinking, I mean, I think you've put it very logically in terms of why this actually has to happen. And I suppose the naysayers and the doomsday scenario people, I mean, they're maybe not thinking it through.
Yeah, and actually there's another reason. When you look at the insurance industry and the pension industry, they're really suffering. They have to go to ever riskier investments to get yield. So they're suffering under those low or even negative interest rates. So if we want to bankrupt our insurance industries and our pension industries, then we can stay at extremely low interest rates. If we want those industries to function, we need to go up. And if you have aging populations who have savings, they also need to see some return of the savings. I'm talking about Japan here mainly.
And again, I mean, it's all connected. We can't really talk about the oil market. We can't talk about, fiscal policy. I mean, it all, in a way, has to be related. And when we see particularly 2 years of low oil prices and the impact, then the money off the market, the investment that's off the market, that's hitting the investment banks, I mean, there's a knock-on effect right away. So really, we need to be looking at the health of the economy in a much more holistic way, probably.
Absolutely, absolutely. And, that is, the economy is what makes the demand. And the demand is what gives companies the interest and the incentive to invest. So it's really all related. Through the economy, we go into demand, which goes into investment, which goes back into supply.
So it has been the last 2 years probably a pretty good time for the consumers. And in that time, many of the emerging countries too have actually taken subsidies off the market. And this is something I know we talked about several years ago when you were actually saying that's what they should do and it would be a good idea. So they've either taken your advice or they've been thinking the same. Either way, it's a good sign. But it hasn't actually caused too much pain. And it was the right time really to do it, wasn't it?
It was the right time to do it because it causes less pain rates low. And then you also get the people to understand that they have to pay for things. And when prices go up again, it's in the psychology. If you take something away when it's really hurting them because they're consuming a lot, that's not good. And now, because the subsidies came off, that had dampened the consumption a bit. If you don't have to pay for something, you're more likely to squander it than if you have to pay for something.
Indeed, and we're seeing that. I know the UAE was one of the first countries in the Gulf to actually take those subsidies off at a time when the petrol prices, they're low as it is, but they were even lower then. And really the repercussions of that, it's been fine. People have adjusted, and of course they will. And again, it's all part, when we look at the Gulf region too, I mean, the countries that were so dependent, on oil, we're beginning to see a bit of a diversification, and indeed very, very smart diversification that is coming in. The plans for 2030 and beyond, they're really taking this very seriously and looking to grow the nation, to grow the economy, and really to develop their population and the economy as well.
Yeah, absolutely, and they're also investing in other sources of energy. It is not a coincidence that IRENA, the organization for renewable energy, is sitting in Abu Dhabi. So they're sitting in the UAE, and you look at Saudi Arabia, which is looking at more renewable energy. So they're diversifying away from just doing one thing in doing several things, and it's always good to have a fuel mix, and it's always better to be to have a pony that can do many tricks than to have a pony that can only do one trick.
And also when we look at the titles often of the ministry now, they're becoming actually a little bit more. We're seeing fewer Ministry of Oil titles, and we tend to be shifting now towards Ministry of Energy, because we're also looking at governments that have energy policy, and that minister who maybe once just looked after oil and gas is now actually becoming the overseer, of the entire asset.
Yeah, we can markedly see that in Saudi Arabia. They have just renamed. When you get an email from anybody in the Saudi ministry, it says now, please note our email has changed. We are now the Ministry of Energy. We've seen that very markedly in the UAE. It used to be that just Dubai said we want to do more than just oil. You see the whole of the UAE saying, okay, we need to do more.
And now here we have the Nigerian minister coming. You were just talking a bit about that. And of course, speculation too about what's going to happen with the Secretary General. We have a candidate from Nigeria.
Yes, we do have a candidate from Nigeria, and who used to be an acting Secretary General, Mr. Barkindo, who used to be an acting Secretary General. The Minister of Oil of Nigeria is, again, a very seasoned hand. He's ex-Exxon. And as we all know, Exxon is the leanest, meanest and best-run oil company next to, other great oil companies. So somebody with tremendous experience, and Mr. Barkindo, good experience in OPEC, so this is very interesting.
There is. It's a very busy time for this meeting, particularly. And, apart from the fundamentals that are on, we're looking at the economy, there's a lot going on here in terms of the agenda. I believe the minister from Kuwait is going to join us now, a new minister that's in place, Mr. Anas Al-Salatu, and he's acting oil minister at the moment, but of course he has the finance portfolio as well. So he's got a lot on his hands. But we're hearing a lot of him talking to the media at the moment, and again, really looking, to ignite that industry, so to speak, and really move it on.
Yes, absolutely, and he's doing a great job. And Kuwait is a very important country. The four GCC producers, Saudi, UAE, Kuwait, and also Qatar, are important producers. But maybe this big block of the UAE, Saudi, and Kuwait, those are the stalwarts of OPEC and of GCC.
And of course, when we look at production coming from the Gulf countries too, production for the most part, price per barrel is always going to be lower than what's going on in the US. And ultimately, that was part of the policy in terms of, a cheaper price per barrel. That's what they want out on the market there. That's what they want to be delivering to consumers. But again, how is that playing out when we look at the Americas? A lot of oil, yes, coming off. But America really, it'll be a while before they can compete for the price per barrel, really.
Oh, absolutely. Shale will never be able to compete with the price per barrel that you have in conventional oil in GCC, just because of the geography, and because in conventional oil you drill and then you have a well and that will feed for a long time, whereas in shale you need to drill and then you need to move on after 18 months a few kilometers and drill on another space. So obviously that makes it a lot more expensive. And when you look at at Latin America, a lot of it is deep water and ultra deep water, and that's very, very Gulf of Mexico, Brazil, offshore Brazil. That's very, very expensive production costs, because you have to drill very deep, and big environmental, concerns, especially after the Macondo blowout that we had in the Gulf of Mexico in 2010.
So again, a lot of expensive oil out there. There's certainly plenty of oil, still in reserves out there. But when we look at spare capacity at the minute, we're actually hurting a little bit in terms of what's available spare capacity, particularly coming from the OPEC members.
Absolutely, because the OPEC members are all producing really at full throttle. Saudis has still some spare capacity, but they're pretty much producing at full throttle. Everybody else is producing at full throttle, and they've done that. Their policy was, let's drive some of that higher cost oil out, and it has worked. It took longer than we thought to work, but I've always said it's an inspired policy, and it seems to work. And so it seems, as the UAE minister said, the market is starting to kick on, and we all like the market, don't we?
Are you getting that feeling from many of your peers and people that you talk to, that there is definitely, it's not just sentiment, when we look at the fundamentals, there's a sense of rebalance happening?
It is a sense of rebalance. We see that the IEA says that we are adding less stockpiles the second part of the year, and we will start to take out stockpiles in 2017. So yes, definitely the forecasters say it. And when you just look at the underinvestment, and it's not just the money that's not invested, think of the people that are leaving. Think of, BP has just let go of 7,000 people. Then the Schlumberger has let go of many people. Shell has let go of many people with the BG merger. So there is a lot of people who have left the industry, and some of them will not come back. And we do not have enough talented engineers in the industry. They need less people of my ilk, economists, and more people of a serious ilk being engineers.
How much of a threat do you think that is, and what is the danger? Because there's a bit of a crew change going on also at the moment. You know, they're trying to get the younger players, the millennials, into the industry, and that's proving a little bit difficult in some regions as well. And now we're taking people off the market. This happened before. They all said they would learn from it. It would never be repeated. But there are thousands, as you say, gone. I mean, this is, if they don't come back and things pick up, where are we left? And again, it comes back to possibly shift in price down the road.
It will come back to shifting price. It will also come back to getting smarter in technology. If you have fewer people, you have to be smarter in technology.
Now, I do believe that our minister from Iran is going to join us shortly too. And again, Mr. Bantame here, it's like a lot going on.
Oh, in the Iranian market, there is a lot going on. The sanctions were lifted at the beginning of the year. We've seen more investment coming in, and we have definitely seen them produce more. They're back to pre-sanction levels.
We're having, our security guard has joined us. Don't worry. Yeah, it's always, I know, we're very, very busy here, so we're just making sure there's plenty of room. Thanks for moving there, Cornelia. We'll be putting him on the air soon, but I understand his position here. A lot of the key players coming in. Again, let's quickly go back to the economy. We'll be wrapping this up soon. And we've seen most of the ministers coming in, and in fact, we are wrapping it up. So I want to thank you so much. Thank you so much for joining us.
Thank you.
So thanks a million there. And Cornelia Meyer there, who really brought us around the world and put up with a lot of shuffling here as well. So we really, really appreciate her flexibility. All of the ministers, I believe, in place now. Next step is we're going to go upstairs and we're going to join them and see exactly what's going on.